to prove it to you in real time right now. Okay?
Whilst you're switching to the trading view chart, do you mind explaining your opinion on theory versus facts?
Well,
because there are so many theories that get thrown out there nowadays. What's
well,
the difference between the theory and the fact?
That's what they are, mate. They're just a theory. No, anybody that's anybody that knows. Old guys, listen. Go into any dictionary and search theory. Right? A theory is theoretical. It's an idea. Right? It's a logical idea. So it doesn't mean that it's just an idea that's pulled out of the sky. It's a logical idea, but it's still an idea. It's not a fact. So if anybody has something with a theory in it, time theory, okay, I'm not going to go into the names, but time theory, range theory, anything theory is literally that. It's a theory, it's an idea. It's not scientifically proven fact. That's why a scientifically proven fact is called a scientifically proven fact. If you notice anything to do with deep space, they normally call it a theory because nobody knows, because nobody's ever been there to test it and prove it. That's why it's a theory. Okay, and we'll leave that there. So the unicorn model, I've showed you the entry model, and it will happen in the wicks, right? So for example, it would happen in this wick. But before we get on to that, I want to prove to you that it works, right? But what I'm going to do is I'm going to throw a real spanner into the works while I do that, because as you guys know, majority of the educators on Twitter and YouTube, I hate them. They're liars, right? They're marketers. They don't make money trading, right? You need to listen to me. You're in the right place. You've got the right people behind you. Here we prove things. We don't just tell you things. We don't just say, look at this pattern and follow it. We prove our actual knowledge, right? I nearly said theory then, but I don't want to be saying theory. So, guys, look, for any of you guys that know me and TOTK well, there's a few things that I'm going to go over what you might have already heard me say, but I don't trade order blocks. I don't really trade many PD arrays at all. I only really trade highs and lows and liquidity. That's all I focus on. My whole game is focused completely on highs and lows, right? But this is something that you need to understand. I hate order blocks. I'm going to put it out there straight. Everyone knows I'm a straight talker. I hate them, right? I don't trade them ever. I'm not saying it's wrong, and I'm not saying, look, order blocks are good for probing order flow, okay? So like when you're looking at a market maker model and you're going up on the buy side of the curve, okay, you can use the order blocks on the left hand side of the curve, or you can use the order blocks that are occurring below you on the distribution or the redistribution or the accumulation and reaccumulation of stepping stones. Okay, you can use the order blocks for confirmation of order flow. Okay, that's the only time I ever look at them. What I mean by I don't use them, I don't trade them, I don't use them as targets, right? I don't use them. You see loads of people on YouTube saying what we do is, right, we get an order block, we aim for the order block, and then we'll foresee a rejection from the order block, right? Because there's institutional orders in the order block, right? Absolute load of rubbish, right? Absolute load of rubbish. And I'm going to prove it to you today, okay? What most people don't know, in fact, near enough all people don't know, because they've never looked and they're very lazy, is that every single order block, guess what? It has a unicorn model inside on a lower time frame. What happens is, sorry Zeus,
what is a order block on a lower time frame?
it's a unicorn model.
Exactly. And that's what people need to understand. That based off a higher time frame chart, you see where all of the lower time frame opportunities are present.
Yep. Now, guys, something that you do need to do is understand your fractality of candles. This is one big mistake that you all do, all of you. You need to understand exactly what that wick is on a lower time frame. You need to know what that body is on a lower time frame. You need to know what this gap is on a lower time frame, so that you can foresee things happening from a higher time frame or a lower time frame, vice versa. Okay. Firstly, I'm going to show you this one, right? What most people do is, right, if, for example, we're expecting some kind of reaction from this level, me personally, okay, like I said, I'm not going to lie, this is what I want to see. I want to see a reaction, right, from this high. I don't care about the order block initially. I want to see a reaction from there. We don't get that, and then somebody will come to me and say, haha, like, your your high or low didn't work. It was the order block. I told you order blocks are like the thing to trade, right? Now, what that same person does is this, right? That same person will, I don't know, like I only use the bodies. Most people will use the whole wick, right? I haven't got the fib set up, but you get the point. They will split this up into quarters, right? And then when it bounces off the 75%, they'll say, ha, there you go, wow, wicked, I'm amazing, it bounced off the 75%. Well, what if it bounced off the 50%? Oh, yeah, because it bounced off the 50%. Okay. Well, what if it bounced off the 25%? Yeah, it bounced off the 25%. That was the other level. Well, hang on a minute. How would you know that before this happened? They don't know that. And if you do this yourself, you'll admit that you don't know neither. You're just waiting for a reaction off one of those quarters, right? But these same people, all they've got to do is look, right? If I mark off this order block, I'll take this line, get rid, right? And we'll investigate. We'll go down to the 1 minute. Just bear with me, right? We come down to the 1 minute. We have this very obvious order block down here. Now, this isn't hindsight, guys, just so you know. I actually did this live, right? We can call this an order block. Most people will say, okay, there's a high, there's a low, and but this high is not higher than this high, right? Okay, fair point. But on a lower time frame, this is still a breaker. It starts getting very confusing, right? I don't want to get too technical and overwhelming. The same here, right? For me, this is a breaker, right? And some of you sitting there, and some of you did it on me the other day in the chat, and you went, no, Rich, it's not a breaker. It's not a breaker at all. It's a mitigation block. Didn't take the high. Okay. My argument would be it's still a breaker. People are going to say, what? What's this guy on about? Like, all the guys on Twitter were right. He doesn't know what he's on about. Well, so I'm going to show you, I think it was this one. I'm going to show you NAS, right? Guys, once you understand this, like, this is ES, this is NAS, right? ES at the top, NAS at the bottom. If all three assets make a fail swing, or they make a lower low in simple terms, yes, this is a mitigation block. If NAS makes a higher high and ES makes a fail swing, guess what? This is still a breaker. Go and investigate. Okay? Trust me. If Dow right? I'm not going to show you Dow, can't be bothered. But if Dow did not make a higher high, and ES did not make a higher high, this would then be a mitigation block. Guys, SMT, right, changes everything. And for those of you that think I'm talking rubbish, I'm going to prove 2 points in one. I'm going to get the same order block, the same breaker, right? I'm going to use this. I have a very different process on breakers. For me, this would be the breaker, but I'm going to use this black candle, like everybody knows, right? What did I tell you about there being an algorithmic price level here, where price will react in the future? Okay, I pull it out, and you're going to say, yeah, but Rich, look, it didn't react cleanly here. Okay, now that's because, as you know, you can use all three candles as the breaker, right? I like to only use one. There's a reason, but we won't go too deep right now. There was a retracement, the retracement that I showed you on the hourly, right? Watch this. And everybody's trying to guess where it's going to react from. Wow. Which quarter was it reacting from? It wasn't. It was reacting from that exact level. Look. It doesn't get any cleaner than that. Right? And then what happens? It just repeats itself. Repeats itself again, right? We would almost definitely have SMT. We would also have another breaker, and we could enter again. Right? It just repeats. Unicorns are everywhere. If you were unsure, you could have used this breaker here, this big breaker. That's fine. Yes, it's not clean. It hasn't got the fair value gap, but you don't have to stress. We'll get into that. Now go back to...
I wonder, Rich,
yeah.
how many times a day do you believe unicorns form?
Every hour.
Yeah, exactly.
Every hour, but those ones won't be clean. Like they'll be really messy. But
that's the thing, right? It's about selecting the ones that are not messy.
Yeah, and they won't move as far. So exactly. the distribution from those every single hour unicorns won't particularly move that far. Like that's on the 1 minute though. But if you wanted to try and be smart and talk smart, you could say, okay, you could use 15-minute candles and go to say the 10-second chart, and then you get them every 15 minutes. But we don't want to be that stupid. We're going to keep it sensible. And basically, the way I would look at this is, although they happen every hour, what you want to do is only use them when they hit a key level like this. This is very messy because it's like 5 in the morning. Okay, let's go to the 1 hour and just investigate, and then we'll speed up because, as per usual, I'm talking too much.
I think the people appreciate it, bro. No worries.
Yeah. So if we look now, no doubt we're going to get some smart arse in the background saying, yeah, brother, it was a rejection block. It wasn't a rejection block. It wasn't the order block. It was the unicorn. It was the algorithmic price level right here, right? What's funny is we don't really have enough price action here to really showcase this, but if I was to pull this exact level out in time, right? Obviously we're all-time highs as well, so that's not going to help. You will see how this level here actually reacts all through time. Okay?
Yep.
Now, I'm going to show you one more example, which is here. It's a messy one. Right? Exactly the same principle. This isn't hindsight, by the way, guys, but I traded these, so it's not like I'm just coming to any... And I'm not showing you the cleanest examples neither. But look, we have this order block, I'm going to mark the whole thing. Right, we have this order block, and again, people don't know exactly where they are going to react from. Me personally, I'm already marking the high because I'm not looking for this move particularly. I'm looking for highs and lows to be taken. That is it. That's all I look for. But what I will do is, while price is playing out, I will see how it reacts at this specific level, and that will tell me whether or not it's going to take the high. This is where you have to use your brain, okay? I'm already anticipating there'll be a unicorn inside the wick of the hourly. Look for the most obvious one. This is very clean. This is a real unicorn, by the way, guys. Look, and this would have been a high probability trade as well. So we'll just investigate this right now. SMT, right? We have two back to back. I'm going to go off the most obvious one for some of you guys, right? Some of you might say, okay, but we get a little bit of drawdown here, which is fine because the exact price level does occur around the breaker itself. Okay, so even though the BPR was a little bit lower down, it's still important. It's still giving you the heads up of exactly what's going to happen. Okay, perfect move. Look at that. You're only after 5 to 10 handles. That's your day done. That's your week done. If you're smart enough, you only need 5 to 10 handles once a week. You don't need them every 3 times a day, right? Watch this now. This is the unicorn model. All I do, I stretch it out in time. It's that simple. This proves how high probable these are. Look at the reaction. When you see me catching these tight reversals, this is why. I'm just looking back in time. I'm looking first, look, you need to understand this. First, I'm aiming for the high. I want the high to be swept. That's my model. That's my model for life, if you want to say. I want the highs and lows to be taken. Okay? When it doesn't happen, I'm already anticipating this could be a possibility that we don't take, because going back to Turtle Soup framework, this is standard Turtle Soup framework. Some of you are like, what? What do you mean Turtle Soup framework? I'll just touch on it slightly, right? Relative equal highs taken. So now we have a liquidity purge and a turtle soup, right? Most of you think that this move's already finished by the time it gets to here. No, it's not. Right? Standard procedure is to come right back up to 80%, 75 to 80% of the first move before going to the drawn liquidity, which is here. This is standard turtle soup framework. Now, when you see me talking about turtle soup, it's because the turtle soup framework is everything. But what you've got to understand is you don't use the turtle soup itself. You use the market maker framework inside the turtle soup. Okay? You need to understand that. Now, we look at this entry. And I'm sure you can admit, Zeus, it doesn't get much more accurate than this, does it? You know, like, you get these people saying, oh, pull a standard deviation, pull a fib on the order block and split it into quarters, but I'm not being funny. You've got to admit,
It's very.
yeah, it doesn't get much cleaner than that. Now,
I wonder, mate.
yeah,
Do you mind explaining a bit about how you utilize this knowledge to anticipate an expansion to then take place? into your anticipated direction.
Yeah, of course, mate. There's multiple ways of doing that. The most simplest is using the higher time frame. Like straight away, if I go back to the hourly, let's clean this up a little bit. Mate, it all goes back to like people are just really lazy. Like, and I don't want to speak bad of people, and like, come on, I know some of you guys do work really hard, but what you've got to understand is you need to understand how turtle soups and market maker models are utilized, right? But from this position right here, right, some of you guys are looking at this and you're probably still a bit bewildered, right? But when you've done thousands of hours of backtesting, like me and Zeus and some other people in the group, what do I notice here? Very plainly, it's a consolidation. This is a consolidation. All you have to do to find a consolidation is find where all the bodies are in line. So if I wanted to like be really specific, Luke, watch how I do this. Watch. I'm going to zoom in. Do you see how there's more bodies in the shaded rectangle than anywhere else in this area? Right? That's because this is an original consolidation. I already know that by looking at it, right? We can stretch it out like this if we want to, but basically it's the bodies that give us the most volume of price in one area, right? We don't need volume indicators, we don't need all this kind of caper. If you look here, you see how there's two bodies next to each other. Look, this is also an original consolidation right here. It's that simple. I'll prove it to you. We'll go back down to, say, I don't know, a 5 minute, for example. Look, there's the original consolidation for this market maker model. Right? All I'm doing, I'm using Turtle Soup framework, right? Because I know that we've souped. I know that the draw on liquidity is lower, right? Which we'll come into in a minute. And I'm anticipating when this leg comes up. When this leg comes up, we're either A, going to sweep the high again, or we're going to react off the previous algorithmic price level, which is the unicorn model. The signature's right there. When this leg goes up, I'm anticipating either a reversal here, which I was, or a reversal here, which is what happened. As soon as I start seeing this reaction here for the reversal, right, then I'm anticipating the distribution and the sell side of the curve, right? And
Do you mind explaining that through the terms of accumulation, manipulation, distribution?
yeah, of course, mate. Let's make this a bit neater for some of you guys. I
I
don't.
think it's very important for
Yeah.
people to understand the importance of AMD and Power of 3 in general.
Yeah. So if we look, we have the accumulation. Okay. We have the manipulation. And then we have this very lovely, nice, strong distribution.
And that's basically your market maker sell model.
Yep. And that's exactly it. It's that simple, right? Yes, price went all the way down here, but we don't care, right? We're looking for the terminus of the market maker model. I wouldn't go to the wick, I'd go to the bodies just to give you a little bit more security, and I would say this was the terminus, right? and literally you could enter here or here. We get SMT here, right? So you enter here or on the pullback. I'm very aggressive. I never wait for the pullbacks into fair value gaps, as Zeus will tell you. I always just enter, or as you can see from my videos. This for me would be the terminus, and I would hold this for at least 10 handles, for example, and it goes 35. But I don't care. I'd be done here. I'd be done when this first low got took. That's just me personally. There's nothing wrong with holding this though, guys. Don't ever think that. Like, it's going to hit the terminus. Whether it hits it today or whether it hits it this session is another argument. But it will definitely hit this level. So that's the...
And I think,
go on.
I think the beauty of what you just showcased here when it comes to AMD is that people need to understand is that with the second line that you just have drawn inside of that blue box, you see that same AMD fractal play out.
Yep.
Do you mind explaining that on a
no.
lower target?
No. So if you look, guys, look, because you need to know how to see this fractally, right? Here, this, okay, so I refer to them as a V shape just for simplicity, right? That...
The drawing skills coming back out.
Sorry?
The drawing skills coming back out.
I know, it's nice, isn't it? This, listen, shit with computers, good trader, that's what I always say. This this guy is a fractal market maker model, market maker sell model, right? This was a market maker buy model. I mean, we can even showcase the two Zeus. There's two there, but if we want to get really technical, we can see that this is the original consolidation of the sell of the buy model. Look, here's the original consolidation. Here's the reversal. Okay, then the one that Zeus was pointing out is this one here, right? So what I'm going to do, I'm going to put myself to the test. Let's see what happens, right? Here we have the original consolidation, right? Look, bodies and the wick. It won't let me cover them, right? So here should be the original consolidation on a lower time frame. Okay, now we'll go and investigate. So if we go down to the 1 minute, wow, that's shocking, isn't it? Rich the Bull wasn't talking rubbish. So now we have a smaller fractal market maker model. We can even go down onto the, say, let's go look at the 15 second. Let's go crazy. Oh, we can't. 30 second. Can we go to it yet? Now, what do we have here? This is what I was trying to showcase. It's cleaner on the 15 second, but I can't go down to the 15 second. And you're probably thinking, well, how would you know? But me and Zeus are very weird. We can tell you exactly what's going on from a higher time frame. It took me a long time. Zeus used to irritate me when he did it, and then I thought, right, I've got to learn it, and I did. So this would be a very clean unicorn model on a 15 second. But as it is right now, right, it shows here on the 30 second. Now what some of you guys are probably thinking is, yeah, but we don't really get a perfect entry, but this retest is the entry. Okay, because if this candle closed lower, this would be a fair value gap. This is just an immediate rebalance. It's no different. The logic is exactly the same, and this is something that you have to understand. So look now, this is exactly the same fractal. Original consolidation, if you want to be specific. Terminus. Entry. Take profit, 12 handles. 12 handles in like 5 minutes.
And
Done.
Rich, shall we also just explain to the audience then that if you look at all of the retracements that took place inside of this leg lower, that on a even lower time frame, you would see again a market maker sell model.
Yep. It's well.
AMD.
Yeah, we're on the 30-second now, right? And what you've got to understand is, right, this is a market maker model on a lower time frame. This is a market maker model on a lower time frame. This is a market maker model on a lower time frame. Look how many market maker models there is. And this is on a 30-second chart. So, and like I say, I don't want to sound arrogant. I'm just showcasing what you can learn if you put your mind to it. And, you know, in the day when some of you guys are saying, oh, I couldn't find a trade set up, or, you know, like, I'm not saying to take every trade set up, but what I am saying is they still need to be high quality setups, right? But once you understand the logic, there's just setups everywhere. Like, this could be like a 1 second market maker model here. And you might be saying, don't be stupid. No, I'm not being stupid. There's people that actually trade these. High frequency algorithms trade these market maker models on a fractal. And then if you look, like Zeus says, we have accumulation. We have manipulation. And then we have, well, that wasn't quite right actually. And we have distribution. All the way to the terminus. And look how it hits the terminus. Like, this isn't just something that I'm making up. Like, you've just watched me do it fractally. You've literally watched me do it.
And I think what's even more fun to realize is that what you just drew, those boxes, the green one, the red one, and the blue one, are all occurring within a larger fractal of this.
Yep.
The green one, a red one, and a blue one.
Yep.
And in each box,
There'll be one of each.
you will see these fractal boxes.
Yep.
AMD consistently, over and over again.
Now,
And Rich, before we continue, yes, one thing that people will ask, and one thing that people are struggling with, is you refer to it as the 3 candle model. Do you mind explaining that?
yeah, that's what I was just going to say, because one thing that irritates me a little bit, mate, on social media and sometimes in the Discord, so guys, don't hate me for what I'm going to say, but there's certain methods that I'm not going to mention that are circulating right now. And what you don't understand is the fact that Zeus has been talking about this for a long time, but you guys are not actually thinking about what's going on. And although Zeus mainly uses 90-minute cycles, right, guys, you need to listen to me, and I don't want to go too off the subject, but look, the 90-minute cycles, right, are no different than a 1 hour candle, a 90-minute candle, a 3 hour candle, a 4 hour candle, a session candle, a daily candle, a weekly candle, right? They are all timed ranges. That's something that you need to understand, right? And unfortunately for some of you, the 90-minute cycles, right, can be difficult only because you can't foresee it as a candle, because the 90-minute cycles don't line up with a specific candle. I hope that makes sense, and I hope I explained that correctly.